Coming in this show, my commentary on the financial markets and some warnings from the supply side. Also going to show you a preview of a member video, stock sectors. We're going to look at the stocks 50, and also a special report on the stock market. The correction is on, but can you see it yet?
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market continued to chop in a narrow range last week. However, there was deterioration below the surface, as the mega caps masked weakness in many other market segments. Monday, the stock market did get a gain, about 16 points, but weakness in the Russell was very apparent, and that disparity seemed to go on throughout the week. Investors did get ready for a wave of coming bank earnings, and that brought a lot of real good surprises to the upside starting on Tuesday. Big banks did start their earnings with Goldman Sachs and JP Morgan. Huge beats there. But revenue weakness was apparent, and those stocks did move to the downside. Maybe they had come too far, too fast. A friend of mine, an analyst from the CBOE, shared an article with me on Goldman Sachs saying that they have pared their holdings across the board by about 25%. They did the same thing just in 2007 and 2008. And he makes a great point that as Goldman Sachs and these big money management firms get a lot of money in to invest, they kind of invested across the board. And that includes a lot of the small caps like in the Russell. But they happen to be the primary buyers in a lot of those low cap stocks. And when they begin to sell and sell across the board, those low cap, thinner stocks tend to get beat up pretty badly, as happened in 2007 and 2008. And that might be foreshadowing some bigger declines. Of course, I've got more to say about that. Tuesday did bring news on the Consumer Price Index, up 5.4% year over year. The core up 4.5%. Massive numbers in there. Futures took a hit on that news, but then the tech buying came back in. The Russell did get slammed again, and the market moved lower by about 17 points. Big news on Wednesday. That was the big news day. Early in the day, before the opening, Apple said that they're raising their production by about 20% on their new generation of products that will be coming out. That lifted a lot of the tech stocks, but then the PPI news came out. PPI up 1%. That's 7.6% year over year. The core up 5.6% year over year. Those are massive numbers. And it's so interesting to get those numbers on the day when Chairman Powell brought his testimony, semi-annual testimony, before Congress. And he said things like, there's no worry about inflation. We'll make sure it's transitory. And that, he said, after inflation has ticked up notably. But then he said, it's in the range of Fed goals. What goals did they ever have that said we're going to get 7.6% year over year inflation? I mean, I just cannot understand that. He said the strong job report is still expected, but overall jobs are still weak. And he said the economy is way off from a taper. Wow. I mean, is he looking at the same things that we are? And if he says something like that inflation will be transitory because we'll make it so, that obviously means that at some point they're planning on raising interest rates very sharply. assuming that they're going to have to do that. And of course, that would be annihilating the markets if that did happen. So really interesting. I just, don't know if he's looking at information from the same planet that we are. It's just absolutely bizarre. We also saw strong economic data coming out on Thursday, where we saw the techs finally start to get a bit of a hit on the downside. S&P 500 moved on 26 points, but then recovered again as the buying came in to just small losses on the day. The Russell, however, remained weak, and it was down again on Thursday. That's 3 days in a row, down about 5% from peak to trough. That is a lot of selling, and a lot of damage was done. And there was a short-term breakdown in the Russell, and that is the first of the major indexes to do that. So some indication in there that there is a lot of selling under the market. Friday retail sales came out up 0.6%. That was a surprise. They expected it to be a little bit lower. Autos sales are very, very low. There are no cars for people to buy. That's it because of the chip shortage. And wholesale prices on cars just absolutely have exploded. I own a sports car. I won't brag about that too much. However, I bought that 2 years old about 3 years ago. And during that first 2 years or so, 2.5 years, it lost about a third of its value based on everything I saw. And now I could sell it for the same or more than what I had bought it. So talk about inflation. How about on wholesale cars? It has been absolutely nutty. So anyway, car sales, they're crashing because there's no cars to buy and prices are really high. You got to wonder if that's going to hit the real estate market too, because affordability is just going off the charts. It's like back in 2007, and I don't know how anybody can afford to buy houses on just middle-class salaries. It's just gone absolutely crazy, and I think we're going to see those prices and house sales fall off very sharply based on these prices that we're looking at. On Friday, on that retail sales news, stocks did try the upside, but sellers did come in again. And the market right now really looks like it's falling of its own weight. News of consumer confidence falling off very sharply did also put some pressure on the market, but it's up where the rubber band is just very stretched. And now you could see in the market that we are seeing a lot more choppy action coming in. And as we've seen throughout the week, as if you look at an hourly chart, you'll see that during the day, a lot of sellers did come in. And at the same time, the bond market and the dollar remain strong as money flows, maybe covertly so, are moving from the stock market into the bond market and the dollar. You can see the same thing for the indexes. As much of the market has been correcting, while the major indexes are at all-time highs. And I have a special report coming later in the show that's going to look deep into that. And part of what's sucking up money is the IPO market. I'm going to give you a little picture of what I'm looking at here in this IPO market, and I think it is significant. This is IPO activity from 2016 to 2021. And look at this chart. This is absolutely incredible. You can see the level of IPOs right in here. They were pretty much under 100. Into 2020, there were 365 IPOs in the first quarter of 2021, up 66.7% for the fourth quarter, from the fourth quarter of 2020, up 677% compared to a year ago. Look at all this supply of stock that's been coming out in here. Just absolutely incredible. Our source here is FactSet from Fortune magazine, and this is just showing you that there is a ton of speculation going on, or a ton of taking advantage of the speculation that's been going on. Just huge numbers that we see in there. And actually, IPOs, well, not actually doing that well. If you look at some of the biggest, widely followed IPOs, Affirm, Poshmark, Playtika, Quantrix, Bumble, Oscar Health, Compass, all of those are way, way down from their peaks after the IPOs. And a lot of those people have to be just wondering how could they pay those ridiculous prices for those. And I think the speculators are really getting hurt in that regard. And with all that supply coming to the market and money moving out of stocks, and I think a covert way, into the some of the safer areas like the bond market, I just think that all of that supply is really starting to hit things. Of course, that is what our work has suggested, and that a market correction was coming, and actually, I think it's here. I will talk more about that in just a little bit later in the show. And I'm going to look actually at 9 different symbols and a bunch of indexes in the normal stock market section. And I think you're going to find it incredibly informative. For the week here at midday, the S&P 500, NASDAQ, Dow Jones, fractional losses on the week. Not very much, but the Russell's down over 4%. Bond market, the 30-year moves up a point. The 10-year yields move down about 3 basis points, and it's the 3rd week in a row that yields are moving to the downside. Gold tried to move up, and of course, interest rates falling normally is helpful. It's stalling at a resistance level that we've shown, up about $3 on the week. It was up $27 on the week, and silver is a much weaker market. That's down about 40 cents on the week. Dollar gained 0.7%, and we have shown the cycle patterns are pointing to the upside, and it's a perfect time for that safety bid to be coming in. And that comes at a time when Treasury yields are weak. If you look historically at correlations, usually when Treasury yields are weak, the dollar has a little bit of a harder time. Oil moving sharply to the downside, and we do believe that a top has formed in the oil market. You need to watch the Future Speak show on Wednesday to get that deeper analysis. OPEC Plus news did come out that they are going to increase production as they fell to needing to make a deal with the UAE, and oil moves down over $3 on the week. I think if it starts to tick up again, that it is likely for traders a sell. Coming up for the week, we have a preview of Stock Sector's video. Ari does a fantastic job on that. I have a major announcement on our Level 4 membership change. If you are an advanced trader or soon-to-be advanced trader, you're going to want to watch that. I think it's very important for our members. And then I'm going to bring a special report on the U.S. stock market. The correction is on. Please go to the askSlim.com website, explore that site. You can become a free member, and if you're not interested in being a premium member yet, you'll start to catch up on some of the things that we're doing. If you're watching this on YouTube, please do subscribe to that channel. Click that notification bell so it lets you know when we put up new videos, which we do often during the week. And make sure you give this video a thumbs up. Like the video. If you don't like it, tell us why in a polite way, because I'm blocking a lot of people that have been so impolite. Follow us on Twitter at askSlim. And if you have questions on our membership, please write Brian at askSlim.com for that membership info. Coming up right now is a preview of a member video. Every other week, we bring for our members a look at the international markets, and on the other weeks, every other Thursday, we bring a look at stock sectors, where we look at different sectors of the market. This week, for our members, we brought 10 different countries, analysis on those 10 different countries. That's for level 2, 3, and 4. And we're going to show you a little preview of that right now from RV, who is our lead cycle analyst and does just a fantastic job. So you're going to learn so much from RV.
This is the Euro Stocks 50, and we have added this to our focus list as well. And just an FYI, we do have a long side trade idea out in the Euro Stocks 50. So let's go ahead and take a look at this. For the Euro Stocks 50, we have a dominant weekly cycle, which is broken up into these minor thirds. And these minor thirds are really fairly clear. Let's walk through it in this most recent cycle that we see right here. So here we had 2 cycles pushing up with the dominant cycle rising as well as the minor cycle. You can see the rally right there. Then we rallied further, had a pullback right here, really right on time into this minor cycle low. Then we had the rally off the minor cycle low. Then a pullback right here into the next minor cycle. Then we had one more rally. And now we were very late in this dominant cycle. When you're very late in dominant cycles, this is where you look for money flows to come out and for sell-offs. And you can see we had one more sell-off here to complete this daily cycle that I'm drawing at the bottom. And we are now looking for a bottom to form here in the Euro Stoxx 50. The key low is due 531 to 82. You can see this is a bit of a bull flag that's really forming, and we're looking for this to turn back up on the upside. On the upside, we have an intermediate term 100 at 42.05 and an intermediate 127.2 at 44.14. Those are our targets here on the upside in the Euro Stoxx 50. If we look at the daily chart here, what we have drawn in are these bullish cycles that form here. We show a positive cycle with these green arrows with a higher cycle high. You can see in each of these cycles and also higher lows. So this is just overall a very nice uptrend here in the Euro Stoxx 50. We have formed one more higher high and a higher low. So we are looking for this to turn back up on the upside and make a new swing high in this next rising phase. The key prior cycle high is right here at 41.6680, and the Euro Stoxx 50 is trading at 40.5370 right now. So we're looking for a little bit more upside and for this to turn back up. Note that the slim ribbon is negative. We do want to see that turn positive to confirm the key daily low and that we are in this new rising phase. And that is something that we are still looking for here in the Euro Stoxx 50 for confirmation. If we were to get back over this prior cycle high, we have a short-term 100 and 127.2 as our next targets on the upside from 42.39 up to 43.15. So a very positive pattern overall here in the Euro Stoxx 50.
Coming up, a special report on the stock market. But first, do not go away. Don't scroll forward, especially if you're an advanced trader or soon to be an advanced trader. You're going to want to see this. Our level 4 membership is changing, and upcoming will be price increases starting July 26th. And we are now introducing level 4 plus. All of our current level 4 members will be upgraded to this level, and there will be no price change for you, so you don't have to worry about that. You're going to get every single thing that you did before and all of the new things coming up. It's going to offer all of our personalized touches that we bring and the chart request service that we have brought, where you can ask for custom chart work from us. Due to the personalized aspect of level 4 plus, it will have to be capped. Yes, we have reached the point where we need to consider how we can continue to give the best service to our members, and therefore we need to cap level 4 plus. We currently have space for only 10 more members. That's it. And then there will be a waiting list. So if you want to get in on this and you're not in the next 10, then I assume it's going to get filled up pretty quickly. Then we're going to put you on the waiting list for when somebody unsubscribes, then we'll let you know when you can get into the level 4 plus. The new level 4 includes everything we've always brought before, everything, except it no longer includes custom chart requests. This is what we have to do to be able to manage this, because we give this type of service to so many people and we really need to control it. General membership price increases are coming to all levels. It's necessary to support the enhancements and expansion of askSlim services, and we have a lot of them in development right now. And it's necessary to expand our team to continue to meet the needs of this really growing membership. People love our services, and we need to put more people on. in order to be able to do that. So all premium members, as of the transition, that's everybody who's in the membership right now, or who joins before July 26th, will be grandfathered in at the current prices, and then prices are going up. So what do you get in this level 4 special trial that we have right now? That's for first-time subscribers and upgrades. Beat these increases and get in on these 10 spots. You're going to get our annotated charts live on your thinkorswim platform, our proprietary studies, option bias indicator, market condition indicator, the slim ribbon PO, reversal scout, all of those fantastic indicators that keep you or put you on the right side of the market. You're going to get our custom chart requests, up to 2 symbols per week with our annotations on there and cycle analysis and projections. You're going to get our thinkorswim grid archive with all of those trade ideas and exclusive charts, and full membership access to all of our other content. All of that in the special trial for level 4, 35% off for $303.75. That's $101.25 a month versus a regular of $159 a month. And that number is going to go up significantly after July 10th. So now's the time to get in on that. What else do you get? You're going to get everything in level 3, the Slimulator ranking system, our 84 best traded symbols with cycle analysis, momentum, bias, all of that and more. It's just great algorithms built into there. Our trade ideas, one new one every single day with an amazing instructional video from Arvi. You're going to learn how to do the cycle analysis on each of those, why there's a certain buy area or sell area, or what is the price where the trade idea is no longer valid. You're going to get the great results that we have in there. Level 4 custom charts, you're going to actually see the archive in there and everything we put up for all of our level 4 members who ask for those custom charts. You're going to get chart streams. These are live multiple time frame charts with our askSlim proprietary indicators and the exclusive askSlim webinars. We're going to be able to ask general Q&A, trading issues, trade planning, chart analysis. We do this every other week, sometimes every week. These are live events called askSlim Live, and you'll be included in those. Plus everything in level 1 and 2. Oh, holy cow. How do we produce all of this? SIR Daily Snapshot with our deep analysis on the indexes. The SIR Intraday Live Grid. These are 15-minute charts on the S&P 500, the NASDAQ 100, the Russell 2000. All of that with our reversal scout that keeps you on the right side, tell you which is the strongest and which is the weakest. Support and resistance levels, and the acceleration zones where it's expected that the price will move through sharply in either direction. You get our weekly Future Speak show, 24 different futures contracts that I do deep analysis on, which is included in the complete library of over 500 videos in 10 categories, and that's updated weekly. Our Slimulator Momentum Tracker, 1,000+ symbols in there. We have some groups in there that are pre-coded. You'll be able to look at multiple time frame algorithms for position traders and longer term holders, investors. Our weekly Spider Select ETF report, technical view on the S&P sectors, and our workbench with trade planning worksheets. You can organize, prioritize, and save and track your own technical analysis. All of that incredible that you get with level 4, and you're going to be able to get all of that just for that amazing price. I jumped the gun right over there, and please do go to askSlim.com. Click the link at the top for the special offer, and you'll be able to get more of the specials that we're running right now by writing Matt at askSlim.com. Just incredible things that we're offering right now. Special report. Stock market correction is on. Can you see it? And the bull will be back. Well, after we have seen the stock market move up to all-time highs here, that is the major indexes, we have to say that this is unusual time. that mega cap strength is disguising a market correction that is going on. Yes, I was looking for a correction for the indexes in the area of about 11 to 13% on the downside. That still may be coming, and I'll show you that. But I want to take a deeper look into this, where we look at the weekly cycle charts of some other very significant indexes and segments of the market, so we can get an idea of what's been going on. So we're gonna look at some of those, and then we're gonna look at these mega caps, Apple, Microsoft, Amazon, and get some sense around how they've been masking what's going on in the market. If you take the NASDAQ and you look at the weightings of Apple, Microsoft, and Amazon, those are 30% of the NASDAQ index, and of course moving up to all-time highs. Facebook, Google, of course, those are all stocks that are also heavily weighted, but they're not nearly as heavily weighted. They're more in the 3-4%, 5% category. Apple, Microsoft, Amazon, the heaviest. When I look at those, I'm going to show you that we expect corrections still to come in those stocks in the area of 7 to 9% into mid-August and September. And I think when that comes, we're actually going to see what is a correction in the indexes, and also going to see what probably is a time frame that will set up for the bull to come back. So let's take a look as we take this deeper analysis at these charts. So let's look here. The first one we're going to look at is the XLB. And what I want to point out in here, first of all, is that we do cycle analysis. There's a lot of people that are probably looking at that for the first time right now. And what we look at is market rhythms. Right over here, these on the bottom are these half moons are called cycle brackets. They're just a drawing tool. They're not market cycles. They just help us see the rhythms in the market. We call those the ideal cycles. And the ideal cycles are different for every single symbol we look at. In this case, it's a 33-week average between lows. Cycles measure from low to low, as you can see right in here. So it's kind of a little lesson. These green ovals that I put in right over here, and often I put in yellow, which shows you the corrections. I put in these green ovals because I want you to see when you get into the rising portions after the corrections, you get rallies in the market. Now, sometimes they're deficient, as you see right over here. It eventually did continue to move on the upside. Sharp spike right over here, sharp spike right over here. Those are the rising phases. And you can see in here there's another rising phase coming. I want you to see the materials as we look at the XLB. And that says that what happened in here was there was actually a 7% correction in this segment of the market so far. Now, it could be going down further, and we don't know for sure because there's a variance between the time frame on the low in here, and it could come down for a few more weeks before it eventually turns up. But what we have in here is a very positive pattern, just as we had right in here. And you can see that when you get those positive patterns and you get upward momentum, as showing you on a reversal scout, you get advances. When you get into the declining phases and negative momentum, like the reversal scout showed you here, you get the corrections. When you break down under a key cycle low, like you had right over here, there's a potential for a larger correction right there. So that was the only one on this page that you can see. And when you break out above the last cycle high is when you get into the upside moves. Right now, we have a very positive configuration, and it says that after this correction is over, we're likely to get another move to all-time highs. So 7% correction so far, while the broad market is at all-time highs. The next rally, potentially, will be in the cyclicals, because this is a positive pattern. So I wanted to start out with that to give a little bit of a lesson so you could see in the XLB a key segment in the cyclical aspect of the market. Now let's take a look at a few more of these and you'll get an idea of this covert type quiet correction that's been going on in the market. Here you could see the XLF, and there's a lot of annotations in here because we look at this one very extensively, and our members really are very interested in this. You could see the cycle rhythms that are in here also, and this actually has had an 8.8 correction from peak to trough down over here, and that was pretty steep. And you could see it's kind of struggling there in the resistance level. Let's just zoom in a little bit right there. And this says that, well, you could get some more attempted rallies out over here, but you see momentum is negative. And overall, it looks like the market should be kind of chopping around in here and then ultimately have a correction way out over here into October. So we'll see if the strength can come back, but the key is we've already had an 8.8% correction here looking at the XLF, and that might be an index that continues to struggle as we begin to see interest rates potentially moving even a little bit lower in here, and that weighs on this segment. Next thing we're going to look at is the Dow Jones Transportation Average. Now, these stocks have gotten hammered an area of about 10.8%. You can see right there that decline. Again, note the magnificent cyclicality in here. I have ovals that are yellow and green in here, and that's the declining phases and the rising phases. You can see right in here in this cycle where the declining phase came in, it got hit hard into the area right over here where the cycle timing low came. Same thing right over here, cycle low. Same thing right over here. This was the pandemic. It got slammed. Not much of a correction here. And then the correction right in here on time that is due to bottom very shortly. These lines right over here show you the actual cycle lows. These are the ideal that we have in the bottom. Please do go to askSlim.com to learn about cycle analysis under our cycle analysis workshop tab. So where are we right now when I look at this? Well, we've had this correction of 10.8% while the market is at all-time highs. So there has been a correction going on in the market. It's hard to see when the mega caps are disguising it. And what happens in the next few weeks? Well, after potentially a little bit more decline in here, we get into this next rising phase. And again, there's a lot of cyclicals in this category, so you got to wonder whether it's the cyclicals that are going to be driving the market up. The materials, the transportations, those things that are economically sensitive may be the ones that will be looking at some continued growth conditions in here, at least for a while. And these do point into rallies that go into October. So that might say something yet about the stock market, right? That when a correction does come here, then the overall stock market may be able to move to all-time highs into the fall. Is what that really looks like. Let's look at a couple of more in here, and we'll just look at the XLE, and you'll see what the energy stocks have done in the same cyclical patterns going on in here. That dashed line on the bottom is an oil market that you see right there. This has two cycles in it. This is called the cyclical harmonic family right in here, and you can see in here that the minor cycle came right here, bottomed right on time. The minor cycle right here bottomed on time, and the minor cycle right in here has a few weeks to go on the downside, as you can see right down over there. This correction in here on the XLE, pretty significant, from 56 here down to 49 right over here, which is overall quite a move on the downside in the area of 12%. So a 12% correction right over here in the energies at the same time that the market is at all-time highs. So again, what we're showing you is that the energy sector is in a correction, and actually if it gets under that 78.6%, the odds will be high that it's kind of a major top in there. Getting down to it is, as it is right over here, is pretty important. Momentum in here turned negative, pretty important. So it should be able to move to the downside still, and it already has a 12% drop. At the beginning of the show, I talked about oil market having topped, and that is supportive of the fact that it is likely we're going to see some more downside before the short-term low in this sector right over here. That's about a month away. So as you can see, energy's very weak, while the stock market has been very strong. The last one we'll look at, just a peek of Europe, as we look at the European top 50 weighted stocks. This is the Euro Stocks 50 fund right over here in terms of US dollars. Look at the magnificent cyclical action in here. You could see those yellow corrective zones. And again, that yellow corrective zone, maybe another couple of weeks to go. 7.7% the correction here. So the European stocks have been correcting in a modest way, while the stock market has been holding up here in the U.S., well, at least the major indexes. You get an idea, this one right over here was down 14.8% during this period right over here, and this might have a little bit more to go before this correction is over with there. So that's a look at what's been going on under the market here. As the markets are at all-time highs. Actually, the S&P 500 is maybe off about 1% from its all-time high. Well, how is that possible? Well, Apple is heavily weighted in the S&P 500, and Microsoft, Amazon, and they are together 30% of the NASDAQ, and then a very significant portion of the stock market. So, what those three stocks do is what essentially you see in the indexes. And for index traders looking for a correction, and for those people that have been following my analysis looking for a correction, it's been frustrating. Because, well, there's no decline in what we trade, a lot of us, the indexes. Let's take a look at Apple, Microsoft, and Amazon and see if that correction should come. So I'm going to now look at the Apple chart in here, and I'm going to put AAPL on this weekly chart. And you can see that we look at in here, well, the same kind of analysis that we share. Those yellow areas are areas of correction. That is when these cycles come down, and when they come down into a nested area. So this is the XLK, it's that dashed line right there, so that's the tech stocks. And this right over here is Apple. So the Apple low came right over here. As they all nest on the bottom in here, you get your biggest corrections. You see that here, you see that here, you see that here, and you see that coming right over here. Apple came up right over here and hit that aqua colored zone. That is the fib extension. It did the same thing right over here. And now we think over this time frame here, it's likely to come down. Before this correction came right over here, we targeted March as the time for a decline to 115 to 118 from this level up over here, 144. And that's what it did. It actually made a March low right over there at about 116. So that was a bullseye on that analysis. We are now showing a target of 137 to 140 in the late August to September time frame right in here. And were that to happen, that would push out our stock market corrective timing by a few weeks from what we've been looking for. But you can see that's how it's pointing to a corrective phase right in here, as it did right in here and here and here. In each of these corrective periods that you see, Apple ready for a correction in the area of probably around 7, 8, 9% is what it's looking at right over there. We'll see if Apple has topped yet or not. Microsoft, the next one, we're looking at the three top weighted stocks, and you can see the same thing basically in here. Let's just zoom this in a little bit more. And our target right in over here for mid-August, right in this corrective phase, is 258 to 263. Here you could see in the same time frame right over here, it fell from 245 to about 225. So that was 20 points, about 10% that it fell, or 9%. And we're looking for something similar over here over these next several weeks into the mid-August time frame. Again, that would weigh on the indexes were that to happen. And we'll just look at the last one in here. I could, show you a lot of these heavier weighted stocks, and they're going to look similar to this. You can see in here in Amazon, look at those corrective phases and the declines of significance, as you can see in these nested areas. In this case, when there's two cycles coming down, there are 2 stars that we put right here, and here you can see 2 cycles coming down into late August, early September. Our target 3370 to 3450. That is not a very big decline for the likes of Amazon, and then after that it would set up for another move in here to all-time highs. So when you look at this and you look at the stocks like Amazon and Microsoft and Apple, they are all due for corrections, basically into mid-August through late August to early September, and then they point to their next rising phase. That essentially says to us that, well, the correction may or may not be as steep as we were looking for, but the timing is right for this to start happening right now. And what has been deterioration under the market, as I showed you, looks like it's going to move now into the mega caps and actually will affect the indexes if this analysis is correct. So now let's look at SPY, the stock market. We'll go from Amazon here to SPY. And here you can see, let me just get rid of this line right over here, because I've done a lot of work on this. You can see that where you had this big corrective zone where all this nesting was during the pandemic, and you had a 35% drop right over there. This, where they were nesting right over here, was 10.8%. This one, spectacularly strong, and momentum never gave it up. It was positive the whole time, only fell, depends on the index, 5.8% to 7% right in that area, so not very big declines. And where are we right now? Well, let's just take a close look right over here. The nesting time frame that we've been looking at falls into here right now. That's mid-August right there, and it's plus or minus a few weeks. Then you look at that. We had originally thought that it would not move past 423 on the SPY. We allowed for the possibility to get to the top of the fib extension zone, 430 to 432. That was what we thought would happen at an extreme. Actually, now at the extreme, it's moved through the next fib extension and started to back off. So it got up to about 438 on the upside and just barely stalling. But again, the indexes are being held up, in this case the S&P 500, by the mega caps. Here is that corrective period I showed you in Amazon and Apple and Microsoft, likely to come down into mid-August to early September. Were the decline to be as severe as originally expected to the major 23.6%, that now would be about a 12% decline. If it falls to what would be the 50% level of this cycle, which would be exceptionally strong, that would be a 7.7% decline. So that means that looking at this, we have slightly widened the range or upgraded a little bit of the potential for it to follow the mega caps and give up that kind of 7%, 8% area if it fell down into here, into this August to September or early September area right over here. But this right over here still is that area of the expected drop. And as I showed you, when you look at those other indexes and those other stocks, we really have seen that we are in a time frame where the stock market has been correcting, but it's been really under the market. The correction has been on, but the indexes have held up extremely strong because of those mega cap stocks. So there is risk over the next month approximately. But then based on what I showed you, the cyclical stocks, a lot of those looking like they will bottom sometime in the next couple of weeks to as late as early September. It then says that the stock market will likely move to highs, all-time highs, once again. We looked for the ultimate high for the stock market to be in the first half of the stock market. And obviously, when we redo the analysis and the data changes, we change with it. And right now, it says to us that though we still think that the second half of the year will be down, we think that peak now probably comes out in the October timeframe. So a decline, we're talking about 1 to 3 month view on the market right now. It would be a decline over the next month or so, pretty much in time frame that we've been looking at, and then another rally for the next couple of months. If you want to learn a lot more about that cycle analysis I just shared, in that in-depth analysis and really breaking down these markets so that you can get a broad understanding of it, please do go to our cycle analysis workshop tab at askSlim.com, and you will be able to see a video on there and what the 20 video modules are that we recorded that teach cycle analysis. That I think will be spectacularly interesting to you, and that you will be able to see that there is a ton to learn in that regard. So that is a look at the special report on the stock market, really a deep look. Stock market correction is on. It's quite covert. And then after these mega stocks pull back, then the bull will be back. Please go to our website, askSlim.com. Make sure you explore it. Become a free member if you want, so you can learn more about us. If you're watching this on YouTube, subscribe to the channel and click the notification bell. Make sure you give us a thumbs up, like this video. This was a massive amount of work to bring you this deep analysis. Follow us on Twitter, askSlim. And for membership info, upgrades, anything that you want to do regarding our memberships, please write to Brian at askSlim.com. That's it. I hope you found this phenomenally interesting. I want you to be so careful out there. It's so crazy, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a stage show. And I know all my fans wanna learn how to make some dough. I've been